This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. And let me know if you've heard this one before. A company touting its growth has let go of hundreds of employees in a surprise layoff. This time, it was Sprout Mortgage letting go of more than 300 people via a virtual meeting that lasted only a few minutes, and the company has shut its doors.
So it's with heavy heart I come to you to announce that Sprout is closing its doors today. So effective today, everyone is laid off. So benefits will end today.
It's a story we broke last night on National Mortgage Professional. The New York-based company had described itself as one of the nation's fastest-growing lenders and one of the industry's largest originators of non-qualified mortgages. Employees also thought the company was doing well, and several told us that they were caught off guard and shell-shocked by the layoffs. They were told Wednesday afternoon about a meeting that was happening just hours later. President Shea Palante did not respond to our request for comment, but employees say that they were offered no severance. This morning, an account executive said that they still had not received their paycheck at the time of this taping. They were also given no instructions on what to do with their equipment. And employees tell us that executives did not talk about what will happen with loans in the pipeline. Now, despite Sprout's ability to close loans, the company wasn't able to turn that into investments. A former wholesale account executive tells us Sprout was trying to sell $190 million in loans, but only found investor interest for $90 million worth. Possible sign that Wall Street is not interested in non-QM loans. Sadly, the sudden announcement of massive layoffs amid financial turmoil is becoming a regular occurrence in the industry. FGMC laid off well over 400 employees, also via a virtual meeting on June 24th. That came after an investor backed out of funding for the company. FGMC has stayed open, but the company filed for Chapter 11 bankruptcy last Thursday. So this is certainly a tough time for people working in the mortgage industry, especially after so much success last year. But market conditions can fluctuate, and women in the industry face hurdles that don't change with the economy. Mortgage Star, one of the industry's few women-only events, is a place for women to come together and help each other out. Our own Christine Stewart had a chance to talk with some of the industry's top women in New Orleans.
And you know, the unfortunate truth is the numbers are staggering of women either exiting the mortgage business or exiting careers in general right now.
Kelly Hendricks, managing editor of Mortgage Women magazine, says things have been challenging for women in the mortgage industry.
I think between, the sudden drop in volume with interest rates going up, combined with remote workers coming back to the office, and trying to motivate your staff, get them engaged, reintroduce them to office work versus at home work has been a challenge.
Women across the industry gathered Wednesday in New Orleans at Mortgage Star, one of the only industry-specific events for women, to talk about the challenges they face.
But I do hear stories of so many different people that, weren't given promotions, or they weren't given an opportunity, or they're sitting at a table and they have no voice. And there's no other woman at that table to help them share their voice.
Karen Klemke of DHI Mortgage says the challenges women face are different than the ones her male counterparts face.
There's a lot of studies that are out there right now saying that a lot of women have actually left the industry simply because they needed to be home to care for the children.
But it's not necessarily all bad.
We've learned how to pivot overnight to be home a little bit more. So now instead of on the road all the time or in the office all the time, I can be home on a Tuesday for my daughter's soccer match.
When she couldn't find her place in the industry, Mona Brazow thought about her dad starting a trucking company.
If you couldn't find your place, then you make your place. And so that was kind of the mentality I was working from.
For those who are still at larger companies, they're struggling with the sudden drop in demand due to higher interest rates.
So it's really just a reset, and we see this about every 7 years. It's cyclical, rates go up, rates go down.
Klemke says it's given her more time with her family, and for that, she's grateful. For the Mortgage News Network, I'm Christine Stewart.
In other news, consumers are becoming even more concerned about the economy, and it's impacting both home buyers and sellers. A new survey found 81% of consumers say the economy is in the wrong track. Fannie Mae says that's a record number of people worried about the direction of the economy. That's pushed Fannie Mae's Home Purchase Sentiment Index down to 64.8. That's almost 15 points lower than a year ago and the second lowest mark in a decade. Only 1 in 5 consumers say now is a good time to buy a home, but sellers are also getting turned off. Only 68% of people think now is a good time to sell, down from 76% last month. And finally, mortgage rates keep falling back down, with the 30-year and 15-year fix both falling by 0.4 of a point each. According to Freddie Mac, the rate for the 30-year fixed is at 5.3%, down from 5.7 last week, and the 15-year is at 4.45, down from 4.83. While the drop provides minor relief to buyers, the housing market will continue to normalize if home price growth materially slows down due to the combination of low housing affordability and an expected economic slowdown.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.